morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're talking about a topic that's pretty close to all of our hearts, and of course, that is energy. Now, we would have seen in recent times some recovery in global energy prices, particularly in the case of crude oil prices, which would have recovered from negative territory early in the year, back in April, in fact, and both prices are now hovering in the case of WTI and Brent around that 40 level. Now, has this impacted the fortune of US or international stocks rather, as well as local stocks? Well, let's take a look. So we go straight to our first graph, which would show natural gas and crude oil price performance for the year thus far. And as we can see, it's been quite a roller coaster year thus far for both oil and natural gas prices. WTI crude oil would have been down around 66% in that first quarter of 2020, with a very significant 91% rally in the second quarter of 2020. Year to date, however, it's still down just around 32%, again around that $41 per barrel handle. Similarly, Brent crude oil prices, which is more viewed as the global benchmark, down just about 34% as well. Natural gas down 18% year to date, having been as low as 25% down in the first quarter of 2020, and it's currently trading around the $1.80 per MMBTU level. Now, bringing it a little bit closer to home, the Central Bank of Trinidad and Tobago does publish their energy commodity price index, and as we can see, it's been a pretty bumpy ride thus far in 2020, designated in red. The index, which tracks most of the major commodities that are produced within Trinidad and Tobago, and we're talking the major energy commodities such as oil and natural gas, as well as commodities or downstream derivatives, including methanol and ammonia, as well as several others. That index would have declined from around just around that 79 level to a low of 41.6 towards that March-April time period, which would have been an almost 50% decline in terms of average prices received. That has since rebounded to just around 57.3, the index number, that is, which is still about a 28% decline from the start of the year in terms of that index level. So again, an improving picture, but still not overall a very pretty picture for energy producers, in particular locally. Now, how have these price movements or that price recovery translated into improvement for both local and international stocks? Well, at the local level, the most direct energy play that you could get, which is TTNGL, is still down about 30% from its starting year levels. And National Enterprises Limited also is taking quite a little bit of a beating in the stock market as well because of lower ammonia prices, NGL prices, etc. Internationally, in terms of the US sector ETF performances, well, energy is a clear laggard relative to the market. We can see on the high end of things, or the outperforming sectors, technology, communications, as well as consumer discretionary stocks, the three leading exchange-traded fund US sectors on the market. The S&P 500 itself is just about break-even for the year. So after falling as much as 30% year to date, back in March, it would have recovered most of those losses and is just about breaking even as at Friday's close. That's in sharp contrast to some of the real economy ETFs or real economy sectors, including real estate, industrials, financials, and the topic of the day, energy. And the US sector energy ETF or exchange traded fund is down just around 37% year to date, so certainly lagging the performance of the S&P. Now, is that a signal for investors to buy energy stocks in anticipation of a recovery or some catching up of the index? Well, we'll get to that shortly. Some of those energy stock names that are pretty close, near and dear, or very familiar to the Trinidad and Tobago economy. BHP year to date is down just around 4%. BP, EOG, Royal Dutch Shell, and Methanex, however, are down, ranging between 39 to 50% year to date still. So again, there has been some recovery in prices, but they are still quite well below their starting year levels in comparison to the rest of the sector. Well, so most of the other sectors on the S&P 500. So critically for investors, the question is it time to buy energy stocks? Well, on the positive side, there has been some recovery in prices, although we are still, as you would have seen, just about 30% below starting year levels. But the trend and trajectory are favorable for now. Locally, there have been some field discoveries and natural gas sales agreements, etc., which have been agreed recently, and that we're referring specifically to that Ruby field between the NGC as well as BHP. On the negative side, well, there is that threat of the COVID-19 second wave. We have been seeing cases rising as well as the number of daily deaths rising, and that could derail any global recovery that is anticipated in the absence of a vaccine. And a slower than expected global recovery could mean bad news for energy stocks. Dividend uncertainty is another factor for investors to consider. Energy stocks have long been viewed as a very significant dividend play with yields in the region of 4 to 6% historically. And that has been put into jeopardy with many energy companies considering their cash flows right at this point in time. Rising bankruptcies, particularly in the US, has been a factor to consider in the energy sphere, and that is something that investors should also bear in mind. And locally, those plant closures on the Point Lisa estate would also weigh on investor sentiment before piling in necessarily into energy stocks. So lots to think about before you buy energy stocks or before you think about buying energy stocks. And as always, you can give us a call at 226-8773. Email us at invest@boursefinancial.com or check out our website at www.bourseinvestment.com for advice, guidance, and of course, all of our research, which is absolutely free. Have yourselves a wonderful investing week. This has been the Bourse Report.